Well, moving on, in the wake of multiple interest rate hikes by the Central Bank of Nigeria, the cost of borrowing has surged considerably, prompting Nigerian corporates to shy away from the capital market. Between January and July 2024, the CBN raised the monetary policy rate by a staggering 800 basis points to 26.75%, significantly impacting the cost of capital for businesses as well as the government. Well, joining me for more on this, I have with me Vincent Oshoma. Vincent Oshoma is securities dealer at Midpoint Capital Limited. Thank you so much, Vincent, for joining me today.
Thanks for having me.
Right. Raising rates seem like, the necessary evil. And while the federal government had said it would not crowd out the private sector, it doesn't seem to have kept that promise. What do you think?
It's expected because I don't think we expected to see anything different, because for over the years we have seen government crowding out the private sector because they continue to come to the markets to raise money to fund budget and other activities. And because of the high rate, it's definitely going to, when government is borrowing at such rate, the private sector going to the market is expected to pay a risk premium, and definitely that will affect them. I think that's one of the reasons why you see them shying away, and definitely government continue to dominate the borrowing city space.
But what's the impact of this sort of trend, a situation where we're crowding out the private sector?
Yeah, the impact that it has a lot of impact. The fact that definitely it will make it difficult for private sector to access this money, and if they have to do that, they will have to watch it very, because they are going to be borrowing at a higher cost. Because definitely people, when government borrowing at a cost, definitely they have to pay a risk premium for their own cost. So definitely it's going to affect their own ability to grow, and also affect the economy in the long run, the ability for them to employ more citizens, and also be able to pay tax, because definitely it is in their growth that will affect their profitability and also their payment of tax.
Right. I would like us to break down this particular data. Commercial paper issuance plummeted by 22.6% to 653.1 billion naira in the first 5 months of 2024, now compared to 843.62 billion naira in the same period last year. Now, how significant is this drop? Is it something we should be worried about? I'd like to add to that, new listings of corporate bonds plummeted by a staggering 97.6% in the same period, amounting to just about 6.65 billion naira. Now, this decline is actually staggering in comparison with CP issuance. What are the dynamics here? How do you see this trend?
Yeah, for a long time, we have not really seen issues in terms of equity. And why we saw the rate started going up, especially from 2022, where we started seeing increase in rates. The private sector, a lot of them had to go to the debt market in terms of raising, especially commercial papers, to be able to meet the increasing finance cost. That's why we have seen them a lot of increase. But we are expecting that by now the rates will have certainly be plateaued and started coming down. But we are continuing to see increase in rate, and for them it is not really sustainable for them, because we are looking at increase in rates, and so they will be borrowing at a higher cost, considering the fact that the disposable income of the average Nigerian is greatly affected. So it is definitely going to affect them in terms of their output. They will be able to, we are having products that people will not be able to afford, because we look at the performance of a lot of companies last year. Finance cost was a major thing that dragged those in the manufacturing sector. So it gives a source of concern, because the government talks about growing the economy. We're talking about $1 trillion economy. If private sector, they are not able to access funds at cheaper rates, it will definitely affect their growth, and their growth definitely will affect the targeted growth of the economy. And if the economy is not growing, definitely it has a spiral effect on the citizens.
But does this pose any risk to the banks who are trying to raise capital?
For the banks that are trying to raise capital, I think, because if you look at the options that they have, there are several options, because unlike the previous recapitalizations, you have different cadre of banks. And for the tier one banks, I don't think it poses a lot of issues for them, because a lot of them are have the brand and also they are well positioned to be able to raise money. I think a lot, so that's why they are going for right issue. We expect most of them to go for right issue. I think where it will have problem is it will be having problem for especially for the tier 2 banks and other banks, because when people are investing in these equities, they'll be looking at the risks involved, especially when you have an attractive debt market, fixed income market, people will have to look at it properly before they invest in equity, in the equity space. I think it's an issue that they will have to grapple with as they go forward.
Well, talking about tier 2 banks, one that is quite significant is Fidelity Bank. Do you have concerns for Fidelity banks?
Yeah, when you look at Fidelity Bank, the good thing is that as we are seeing the increase in rates, they went ahead and they have already planned their current offer even before the recapitalization. That they're already looking at raising money via right issue and public offer. I think that's why they have to leave the park in terms of those that started raising money. And the good thing about them is that they have their plans in terms of trying to grow. They already have their growth plan. I think that's one of the reasons why their offer is quite attractive to a lot of people. And the fact that they have gone ahead, I think they may not be that affected compared to those that are coming behind, but I don't think it will have much impact on them. But definitely, people will have to look at that in terms of investing in equities generally.
Right, Vincent, we'll take a break now. When we come back, we'll continue the conversation. Stay with us. Glad to know you stay with us. Dr. Oshoma, thank you for staying with me. Mr. Oshoma, rather. Thank you for staying with me. All right, so very quickly, well, when we look at the government, on the other hand, it has done considerably well for itself, raising capital in the debt market. However, how significant do you think the government's ability to raise debt has been? What has been the impact on the economy? And more like asking if it has been a good trade-off.
I will not say it's a good trade-off, because when you look at the government borrowings, though the government borrowing, the issue is usually talking about borrowing for capital projects. But when you look at the cost, the current expenditure of the government that keeps increasing, it's definitely that a lot of this money that is being borrowed flows to recurrent expenditure, and that doesn't really have a productive impact on our economy. And that's why we will not look at the trade-off in terms of increasing government borrowing compared to private sector. The private sectors are the drivers of the economy. Government's major role is to provide the enabling environment. So if we are seeing increased borrowing in the private sector, we expect to see direct impact on the economy in terms of output, in terms of creation of jobs, and then in the long run, in terms of increasing taxes that is paid to the government. But we have not seen that over the years when you consider government borrowing in terms of and the output that we see in the economy. So it's not really a trade-off that will make us excited.
Right, thank you so much, Vincent Oshoma, securities dealer, Midpoint Capital Limited. Thank you for your time on the show today.
Thanks for having me.